citizen. This season, after a few months of a summer hiatus, we are focused on diving deep into understanding how AI is impacting you every day, professionally and personally. Specifically, this season, we're going to focus on deeper dives into how things work, questions you should ask, things you should know. And one of the focuses of this season is usage-based car insurance. So we're going to split this up into two episodes. So our first episode will be usage-based car insurance, how it works, why do we care, what companies are using it, how do we know that this is working for us, and what are the pros and cons of usage-based insurance. And then second episode, we're going to dive into the more technical components. How are these algorithms built and used? What data is being collected and why? And what that data is being used for? Each company that we discuss in phase one has a very different idea of what and how they want to use that data for and who they sell it to. And then finally, focused on where is UBI actually going? Like, why are these companies really collecting this data? Is it to help us? Is it to become more hyper focused on what we need as an individual, as a consumer? Or is it more focused on collecting the data and sharing that? And then finally, we'll conclude that with the future of ABI. You guys decide, is this really innovation or overreach? We also have some episodes that we've recorded on autonomous vehicles, and we've talked a lot in the past about Internet of Things. Well, now we're going to talk about Internet of Architecture. So what kind of AI technologies are being used in the infrastructure as we start driving these autonomous vehicles? And then something else that we can look forward to is I had a trip to Central France, and I was able to speak to some manufacturing VPs that focused on how AI is impacting them on the floor, how AI is impacting their employees, and hopefully how AI is making those employees' lives a little bit better. So we'll get started. Thank you very much for joining me and for setting time aside to take on what's next. Again, how AI is impacting you and becoming that AI literate citizen. All right. Let's get started. UBI, usage-based car insurance or usage-based insurance. That's what UBI stands for. We're going to focus on the role of data in driving cost as compared to privacy concerns. So usage-based insurance is transforming the auto industry by using telematics and real-time data to personalize the premiums based on your driving behavior. Sounds good on the surface. While this approach offers potential cost savings and a more accurate risk assessment of the individuals, it also has raised a lot of concerns about data collection, storage, data retention, the privacy, especially, and we'll talk about this in a lot more detail, what happens to all that data when you decide to cancel this UBI option. So again, this is an option to your current insurance. It's something that you can opt in, you can opt out. But we're focused on it because now there's over 10 companies, insurance companies that now offer this, but they all have a different way of interacting with you as the individual. So the insurance industry is undergoing this digital transformation. And one of the most prominent innovations in the last couple of years is what we're calling UBI, usage-based insurance. Now, unlike traditional policies that rely on a broad demographic factors to determine your premiums, UBI leverages real-time driving data that personalizes the driving behavior. So, for example, I may be a female that lives in Maryland that's, somewhere between the age of 45 and 50, and I have no driving tickets. That information can be used to build my premium and decide how much I should be paying for insurance. But that falls into the same bucket as someone else, and that falls into the same bucket as someone else, and again and again. And we're all lumped into this big herd, and we're all given just this generalized, insurance. But as AI has created this hyper personalization in retail, i.e., your recommendations on online shopping, it also has now been pulled into insurance, and the goal here is to hyper personalize your insurance premium that fits you. And there's pros and cons to this. In some cases, if I had a poor driving record, being lumped into a large group may be an advantage to me. But if my driving record is specifically used to dial that premium, I may actually get a higher premium with the hyper personalization that I wasn't getting when I was in the large group. So, the role of usage based insurance, it highlights this power of data in optimizing financial models, but it also brings some ethical and security concerns that we want to talk about. Regulations and insurers have to address these challenges by implementing clear data governance policies, ensuring strong cyber security protections, and maintaining transparency in their pricing algorithms. Now, UBI has achieved, I would say, widespread acceptance. We've seen a lot of it on TV with Progressive. They're the ones that really focused making it more accessible through the media, through individuals. But it also has to balance the personalized pricing and the responsible usage of data. And so, as AI and big data continue to shape the future of insurance, the industry as a whole, as well as us as the consumer, must be really diligent or vigilant in how we're protecting our consumer rights while leveraging technology that can also drive efficiency. So, really, usage based insurance is becoming a double-edged sword. It offers cost and risk based pricing, but it also comes with a higher impact of data privacy issues and potential security risks. And as the insurance companies are refining their models and regulatory agencies are trying to catch up, consumers are kind of caught in the middle, and they must remain very much informed in how their data is being used and what trade-offs you're making when you opt in for UBI. So, the ultimate question that we'll discuss today is, how much data are you willing to share for those potential financial savings? In other words, what's your personal risk threshold? We talked about this a couple years ago. Everybody has a unique personal risk threshold, and that's how much risk are you individually willing to absorb in order to have a trade-off for some financial gain. So, how does UBI insurance work? So, UBI relies on telematics. So, telematics, Matics, Matics. Telematics is a technology that collects and transmits driving data via onboard devices or through your smartphone apps or some sort of connected car system. Insurance companies will analyze this data and assess the risk and then determine your hyper personalized premium rates just for you. Now, the most common metrics that is being utilized to understand what your premium is how many miles do you drive? Lower mileage tends to lead to lower premiums. Driving behavior, do you have sudden braking or harsh braking? Do you rapidly accelerate? Do you take sharp turns or increase, all of this can increase cost. The time of day you're driving. If you're driving late at night or during rush hours, these are considered higher risks. Speeding. Do you consistently exceed those speed limits? This could increase your rates. Location data. Yes. Are you driving in a high crime or an accident prone area? This will impact your premiums. And phone usage. This one's a little hard to not do, but phone handling. Um, Even hands-free, because when I first started this, so I've been doing this for 6 months now, and I have lots of stories to tell you as we go through this process. But phone handling is a negative on your insurance premium. So I thought that if my phone was hands-free, meaning I didn't touch it, and I was just calling somebody on that call, talking to them while I'm driving, again, hands-free, I thought this was good. But based on the data that I can see at the end of every drive I take, that was considered phone handling and it was a negative against me. Because even if you don't touch the phone, the fact that you are still talking to somebody on the phone is considered a negative and a distraction and a risk towards your driving. Therefore, even if you're actively touching the phone for checking a map or confirming an address or using hands-free, phone usage is considered a negative. So all of this data helps those insurers offer a personalized pricing. They reward safe drivers and they discount less risky behaviors. And all of this is handled, this data, and this is one of the big concerns that we're going to, discuss is what happens to all of your data when you decide that you no longer want to leverage UPI. So let's focus now on companies that are using it. So we've got roughly eight main companies. So UBI programs, they monitor your driving behavior and they can do this a couple different ways. Again, through the vehicle. So some of the newer vehicles, there's a capability, a function that's available inside the vehicle that you can connect and turn on and off. There's your smartphone. We'll talk about that in more details, pros and cons. And then there's actually a plug-in that you get from your insurance company and you can plug it into your car. Now, several insurance companies, and these are the most, 8 insurance companies that we've heard of. These are all companies that have some sort of approach to how they're collecting data. So first, we're going to start with Progressive, the Progressive Snapshot Program. Now, Progressive's program will collect data and driving habits. The company states that the data collected is primarily used for premium discounts and is not sold to a third party. However, specific details about data retention periods are not publicly disclosed. State Farm's Drive Safe and Save. This insurer emphasizes that data collection is used to adjust premiums and is protected under your personal privacy policies. But information on data retention after policies are canceled is not specified clearly in the documentation. Third on our list is Allstate. Allstate DriveWise program. So this program monitors driving patterns and rewards safe drivers, similar to the others. But recently, Allstate faced some legal challenges when the Texas Attorney General, Ken Paxton, filed a lawsuit allegedly claiming, that the company covertly collected driving data without the user's consent, which then used it to adjust the premiums and also sell it to a third party. Now, the lawsuit claims that Allstate paid app developers to embed tracking software in the mobile applications, which created a vast database of data driving behavior beyond what was listed in the policy documentation. Now, this case highlights the potential for misuse of collected data and underscores the importance of transparency and the consent to data practices. And for more information, you can find this at Reuters.com. USA Safe Pilot Program. So USAA, in 2024, USA agreed to a $3.25 million settlement over alleges of a data breach back in 2021, where unauthorized use of motor vehicle records led to fraudulent account openings. USA denied wrongdoing, but settled it to avoid prolonged litigation and emphasized that it continues to have a commitment for data security. For more information, you can check out mysanantonio.com. For full transparency, all of my research was specifically done using USA's Safe Pilot Program. So we'll get into more of that later. Number 5 on the list, Nationwide's Smart Ride. The company asserts that data collected is used solely for discount determination and is not shared with parties without consent. But again, details on their data retention policies are not explicitly stated in their terms and conditions. Number 6 on the list, Liberty's Mutual Right Track. So this program, the insurer claims that collected data is also used to adjust premiums and improve the customer experience, but specific information about how the data is stored during during the time that you are opted in and sharing this to third parties is not publicly available. I could not find anything about it. Number 7, Geico's Drive Easy program. This one also has the same claims used for assessing driving habits and determining discounts, but detailed policies on data retention and sharing were not disclosed. And then number 8, we have Farmers Signal Program. Same claim, used to offer discounts for enrolling and maintaining safe driving habits. The data collected is to provide feedback and calculate the discounts, but information on how long the data is stored after you opt out the program and if it's even shared with third parties was not explicitly found. So we do have some limitations and considerations here. They all claim to do the same thing. They all claim that they're collecting data and it's used to evaluate your driving habits and adjusting your premiums, also providing you discounts on those premiums. In most cases, it's evaluated every 6 months at the same time your premiums are evaluated. And based on the data that's collected, you could range anywhere from 10 to 30% discounts. So the limitations and considerations, it's really focused in 3 areas: transparency, consent, and data security. So for transparency, many insurers do not feel that it's clearly disclosed on how long they retain the driving data, how long the data is retained after it's shared with a third party, and this could lead to some potential privacy concerns over the data that's collected. Consent. Collecting data without explicit user consent can lead to legal challenges and the erosion of trust. And not just trust, for insurance, but let's say, for example, one of these companies has other products that they're providing. USA has credit cards, and Liberty Mutual and some of these other insurance companies have other products and services that they sell. So if one branch has eroded your trust, then that's a huge impact to that company because now not only are you going to tell everybody how dissatisfied you are, but more than likely you probably won't use the other products and services that that company is offering. Data security, number 3, breaches, such as one that was experienced by USA back in 2021. This can highlight vulnerabilities in the data storage practices. But while usage-based insurance can offer these personalized premiums and incentives and discounts for safe driving, it also presents challenges in data privacy and security. Consumers will want to thoroughly research and consider how these insurances are collecting, using, storing, and protecting their data before rolling into these UBI programs. We want to ensure transparency and obtaining explicit consent. These are crucial steps that insurers must consider and maintain trust while complying with legal standards and regulatory requirements. And so that's what the rest of this episode and the second phase of this episode is going to do, is all of this research has been done for you. So just sit back, listen, maybe go get some coffee or some other type of beverage, and let's dive into this for you. So the last 2 things we're going to talk about today is the pros and cons of usage-based insurance. So let's talk about the pros. I mean, let's start with a positive note. The power of data-driven pricing. So we're going to focus on 5 things. Personalized and fair pricing. UBI insurers, the premiums reflect the individual driving habits, and they rely on a very generalized risk model. So, for example, if you're a safe driver, you can benefit from a lower cost and promoting a more fair insurance system. So, for example, when I was using, I'm still using USAA, they started me off at 30% a discount. That's what happened on day one. And then they evaluate it every 6 months. And with USAA, it uses the smartphone, not like progressives where they give you something that you can plug into your car. And I have a very old vehicle, a 2006. So I certainly don't have one of the new vehicles where all of the software is already in the car. I just have to, decide if I want to enable it or not. So my examples are going to be very focused on USAA and very focused on the phone. So some of the eight providers that we've talked about, they all use one of these three options: the new car, the fancy features, the phone. So I have an app that I download on my phone, and I have to take that phone with me in the car in order for it to monitor. And then the device that I can plug into my car. So at the beginning, I started out with 30%, and then over time, through harsh braking and maybe some options of my, phone use and that I'm not supposed to, at one point, I dropped all the way down to 10% discount. And then when 6 months came around, or the time that my premiums were reevaluated, whatever the discount was at that time was then pulled in, and I got a discount on my next 6 months premium. Number two, encouraging safe driving. So, yes, I am much more aware now of harsh braking. I am much more aware now of, zooming, from sitting from 0 to 60. I certainly don't try to do that in a couple seconds. Um, I do think about how I'm slowing down. I don't slam on the brakes. I do put more space between me and the car in front of me so that if that car slams on their brakes, I'm not slamming on my brakes. So, yes, I would say that it does encourage safer driving habits. Some of these companies will provide scorecards or alerts that will help you reinforce that positive behavior so that you do drive. I'm not going to say more cautiously because there's obviously, advantages to being an offensive and defensive driver. But here in the US, the tendency is to be more of a defensive driver. And so that's what this is encouraging, is for you to be more conservative in your driving habits. Potential cost savings. Yes, drivers who don't frequently exhibit risky behavior, they are going to have that cost savings. And if you're using UBI and compare and add those discounts onto your policies, absolutely. 10% of a discount was far better than I wasn't getting any discount before. And if I can increase my driving habits, then with USAA, I can get all the way up to 30%, although I've never gotten there. Reduced fraud. So by tracking real-time driving behavior, insurers can detect inconsistencies in accident claims, and therefore they could reduce fraudulent activities. Reducing fraudulent activities saves the overhead on the company side, which could potentially be pushed back into more investment to interact with you as the consumer more favorably. Environmental benefits. So we hadn't thought about this one. By incentivizing lower mileage, by driving safer, there's a claim that UBIs may contribute to reduced vehicle emissions, encouraging more eco-friendly behaviors. By discouraging these unnecessary driving, UBI can lower carbon emissions and therefore benefit the environment. This one I think is a bit of a stretch. I haven't quite connected the dots yet on this one. I can kind of see where they're coming from, but I don't think that was the priority of why UBI was initiated. I think environmental benefits is maybe something a little bit more of an indirect benefit that may or may not occur, but it certainly isn't the primary. Okay, so now let's turn the table over to disadvantages or the cons and the risks of using our usage-based insurance, and then we're going to wrap up for this episode. So we are going to focus on 5 areas of risk. 1, privacy and data collection concerns. So UBI collects extensive personal data, including your location here, history. And this has raised some concerns about surveillance, data misuse, potential third-party access. So, if UBI requires constant monitoring of your driving habits, often through GPS tracking, and in our second episode, we are going to get into the deeper dive of exactly how this technology is working. Yeah, this absolutely does raise some questions. How much data is being collected? Is the data only being collected when I'm driving my car, or is the data being collected when I'm walking around or on a bicycle or on a motorcycle? How does the app know that I'm not driving? How does the app know I'm not driving someone else's car? Specifically, if you're using a phone and the phone is with me, but I'm not actually driving the vehicle. Who has access to this data? And how is this data being used, or is it being used beyond just calculating my premiums? So, what else is this data being used for inside the insurance? Now, in some cases, insurers, those companies may share data to third parties, including law enforcement, advertisers, or data brokers. And this raises ethical concerns, as we mentioned, about surveillance and consent. Now, the word data brokers is, think of it as I'm selling data to a data aggregator or a third party, and their job is to collect data from a bunch of different insurance companies, pull that together so that they can turn around and sell it to another company who is interested in looking at patterns of driving behavior. Now, that data broker could be selling it to a doctoral student as part of their research, or to someone at a think tank who's looking at studies. Could be selling it to the government agency who's trying to assess which cars in the United States, the consumer reports these cars have higher accidents, these cars are safer for drivers. All of that could easily be used in the data that's coming from these UBIs. And if it's being sold to law enforcement, then there's a question of, well, what's law enforcement doing with this? And how much of my sensitive data can they visibly see? Now, in most cases, due to the United States privacy laws, they are not allowed to sell data that has personal information. So, for example, if I'm selling you a clump of data or a row of data, there should be no way that through that row of data you could identify me or where I live. So let's think about that one. That's absolutely a big question. And then selling it to advertisers. Gosh, if my data is being sold to advertisers, does that mean that suddenly I'm going to get more spam or more marketing information in my email, or um, a catalog, or more email? I get a lot of spam email. All right, so that was number one, privacy and data concerns. Number two, the data retention after you cancel it. So again, this is an opt-in that you have with your current insurance provider. You can opt in or you can opt out. The question that comes up is, I've opted in, I've been using it for 30 days, and now I've decided to opt out. What happens with that data? Well, I will tell you that before I opt into this, I got a copy of 6 different links, and each of those links went to a huge PDF document, sometimes 20, 30, 40 pages long, that I'm supposed to read in order to know all of this information. Now, I did it for USAA because that was a part of A, I wanted to understand UBIs, B, I wanted to research it for the podcast. But I cannot imagine the average individual would have the time to read through that document, or to really sit down and understand some of the language that was being used. Some of the language sounded a lot like legalese, like some lawyer wrote it. And some of the language, it just sounds so dull that I kind of lost track when I was reading it. So, data retention, what happens to the data after it's canceled? In most cases, from what I've read from some of the other companies and the terms and conditions of the ones I'm researching, they hold that data. And the question wasn't that they hold the data, the question was, how long do they hold the data for? So In some cases, the data is being held for 10 years. So if I only opted in for 30 days and it collected a whole bunch of information on me for 30 days and then I cancel, great, not a problem. But that 30 days worth of data was still being leveraged up to 10 years after I canceled it. And that's the question here. The data retention policies after you cancel it. What happens to the data once I cancel? Now, insurers will typically retain the data for very periods of time. Again, some of them 6 months, some of them up to 10 years. But it's all based on company policies, legal requirements. There are some states that have a variance in data retention policies. So, where the company is incorporated out of, whether it's Maryland, whether it's Ohio, Texas, New York, all of that plays into how these policies are interpreted and how long that the company can keep your data. So, an active policy, your data is continuously being collected and analyzed. After your cancellation, the data will be retained for, in some cases, 6 months and many, many years, and in some cases, up to 10 years, and can be used for legal auditing, marketing, or other purposes. If it's a deleted policy, so many insurers do not automatically delete the data upon your cancellation. So, for example, I can have, I can be with USAA for my insurance policy and I can opt in for this UBI and then I can cancel the UBI. And when I cancel it, that data is retained for months up to years. But what happens when I no longer want to be insured by USAA and I completely switch to a different company like Farmers Insurance? There is nothing that I've seen that says that that data is being deleted just because I've decided to no longer be with my current insurance provider. So therefore, the data is not specifically deleted at the time that you leave the insurance company. You have to explicitly request it. And the process for explicitly requesting that they delete your data varies from program to program. In some cases, well, in most cases, it had to be in written format, like an actual letter. Some cases, it was okay to do it as an email. In others, it was a multi-step process. And still others, it was going online and clicking the opt out, but then you also had to unsubscribe and you also had to submit a letter for different types of data. And so that brings us to the other challenge here is the data they're collecting is stored in different areas of their company. So some data I can unsubscribe to, some data I can opt out of, some data I can go to the website and say delete, delete, delete. But then some of the other data was being stored in different areas of the company, which then required that I also had to put something in writing. So that I did not go into a lot of in-depth research on, but is definitely something that we all want to be aware of. So overall, the lack of transparency does make it difficult for consumers to really understand how long their data is being stored and how they can access it or who can access that data after they decide to leave the insurer and go with somebody else. Number three, cybersecurity risks and data breaches. So insurance companies are storing a vast amount of data. And yes, you can consider this as sensitive data, even though it may not be sensitive to me individually. It does include sensitive data that somebody could want. And that makes them a high target for cybersecurity attacks. So a data breach could expose customer driving history, locations, behavior. The insurer, because they're collecting a lot of this data, can become prime targets for hackers who can then take information from myself and then use it to do something negative, become a bad actor to me individually. So a data breach could expose my personal driving history, my location data, my daily routes, my frequent stops, because remember, whether it's a GPS on my phone or whether it's the brand new car with the capabilities or whether it's a device that's being plugged into the phone, it is still collecting all the types of telematics that we had discussed earlier. So even with the strictest security measurements, I'm not sure that there's any system out there right now that is completely breach proof, which does make long-term data storage a potential liability for consumers. Number four, algorithmic bias and inaccuracies. So we've talked about this one a lot, but not specific to UBIs. Insurance companies, they're storing that data, and UBI relies on machine learning models to assess risk. But these models can be flawed because they could have potential biases. One of them could penalize urban drivers who have frequent stops due to traffic, while favoring rural drivers who drive more long distances. Misinterpreting hard braking as reckless behavior when it could simply just be I needed to avoid the accident from the baby carriage that ran out in front of me or from the kid who kicked the soccer ball into the street. Data discrepancies between the smartphone UBI apps and the telematic devices could lead to incorrect assessments. So I want to talk about this one in particular because I have the phone, and I absolutely can see that the models that were used to train the data do not do not take into account someone who lives nearby that's 2 miles, to most places. So 2 miles over to Walmart, 2 miles over to kids' school, 1 mile to the grocery store, 1 mile over to the YMCA. Like I live in an environment where in pretty much 5 miles, I can get to everything I need to go. But that is also how my initial 30% dropped down to 10 is I was negatively, I'm going to say penalized, but I was negatively impacted when I was driving short term, really short term local driving. Under 5 miles is what I've noticed. Um, Yeah. And unfortunately, because I'm using a phone, I carry that phone with me into the car. Now, if I didn't want that phone to take that drive into account, I could turn my phone off. But then if there's an emergency with my kids or I'm using the phone for mapping services, I'm not able to do that because I turned the phone off. Now, some of these companies, so there's pros and cons with these three devices, that we've talked about. But what I did like about the phone is a lot of times my kids would take my phone and they'd start playing with it. And now the model would recognize that my phone is being used a lot. And again, I would be negatively impacted. But in the phone, there's an option for each drive that I can confirm whether or not I was the passenger or whether it was not a drive at all. So, for example, there was not an option that said, hey, my kids picked up my phone and started playing with it. But in those scenarios, so that I wasn't negatively impacted, I would have to select I wasn't driving simply because my kids were picking up the phone and playing the game. Other instances where I was driving from one side of the parking lot to another, that's not considered a drive. It registered as a mile, but all I did was go from, say, the grocery store over to the gas station, which is all in one big parking lot. Now, the phone that I used has an option at the end of each drive that says this was not a drive. So those two options, this wasn't a drive or I wasn't driving, allowed me to take those out of the history. And as such, it took it out of the overall calculation of my driving. And then lastly, I'm the passenger. Oftentimes, I was really the passenger, where the guy, I dropped off my car because it was in the car shop, and someone would drive me home, and it would register that that was a drive, and it was a really good drive, but I didn't drive it. So I would go into the app and select that it wasn't a drive. So there are some challenges with these models. These models are not mature, in my opinion. I can see with, using this phone app that I've used in the last 5 months that there are many challenges in how those models were being used. And primarily the data that was used to train them wasn't a very, I would say, a truly broad set of data that really understood the driving habits of individuals. Now, I assume that over the next couple of years, the more data it collects, the better it's going to get. I mean, that's exactly what we want. We want more data to train those models so that they can be better models going forward. But at the moment, we're not at a very mature state of the UBI market. And finally, number 5, limited transparency in how the data affects your pricing. So, while some drivers benefit, others may see their premium discounts rise unexpectedly due to minor infractions or changing in buying driving patterns. Insurance, they're rarely disclosing to the full extent how their data analysis methods work, how the data that's being collected is being used to turn around and reinterpret those models, and reinterpret those driving behaviors that then subsequently interpret whether or not your insurance premiums go up or down over the course of the next 6 months. Customers may not fully understand how this behavior translates into pricing. I absolutely agree with that statement. I'm not even sure how this translates into pricing. And I think I'm a pretty well-educated person, but I don't know. And it certainly wasn't in the 120 pages of terms and conditions that I read. Um, so yeah, there is definitely limited transparency to how the data collected is being used in what calculation or methodology that then turns around and says, yeah, good on you, your premiums stay. Or, hey, yeah, great on you. We're going to lower your premiums by $10. And on top of that, because of the data that we collected, we're going to add another 10% discount on your next 6 months of premiums. The only thing I know for sure is that little discount percentage. I see every day how my driving impacts that percentage, whether it goes up or whether it goes down. When I drive my kids, to a soccer game that's an hour away from now, my discount goes up. It goes up by a point because I drove long distance, because it wasn't these short, um, urban drivers with frequent stops that only go, a couple miles down the road. So we struggle as a consumer with understanding what specific behaviors are going to raise the rates, and in the adverse, what specific behaviors are going to, decrease the rates. How can drivers improve their scores? I've done I've put a lot of thought into this over the 5 months, and just looking at the patterns of my driving and looking at how the discounts get increased and decreased, I've got a pretty good idea of what I can do. I'm not 100% positive. I've made some really educated guesses based on the patterns of data that I've analyzed. But I still don't know exactly how my scores can be improved. Is there an appeals process if the data is misinterpreted? Mm, Not really. Again, you'd have to read those 120 pages of terms and conditions. There are some things in there that allow you to go through an escalation path, through legal counsel, through the risk, assessment divisions in some areas. But no, it's not really a clear process. I mean, really, if you don't like it, then you just opt out. That's really the simplistic version that I've read. If you don't like it, opt out. If you really want to go through the appeals process, there is a process in place. It's somewhere buried in that 120 pages I read, and I don't remember where I read it, but I do remember clearly that there is a process there. But I will have to clarify that I only was looking at one specific company. So if I wanted to go find all this information out, I'd have to go read all the terms and conditions from all the other companies. And those terms and conditions aren't readily available unless I happen to know somebody that opted into one of those programs, and therefore I could read through it. But me as an individual who's not insured with State Farm, no, I'm not going to have access to that documentation. It's not on their public website. So really the conclusion of this first session, part one, in understanding UBI and the pros and cons, is without clear guidelines, drivers may feel kind of powerless in how they're negotiating their premiums. But I will say that drivers were powerless before in how they negotiated their premiums. In fact, drivers did not negotiate their premiums. They were just told that based on your age, based on the car you're driving, based on the location, based on how many kids are driving in your car, based on these 20 variables, here's your insurance premium. So, yes, we may feel a little bit more powerless now, but we really didn't have power to begin with. So the value that UBI is bringing to me as a consumer is that if I, again, going back to your personal risk threshold, if I'm willing to share my data and have my data shared, and it's getting me 15, 20% on my insurance premiums every 6 months, I personally need to ask the question, is that worth it for me? So that concludes part one of UBI, usage-based insurance and insurance premiums. Come back to us again for part two. And part two is going deeper into how the algorithms are built for UBI. We'll go into data collection, machine learning models, understanding those risk scores, ethical challenges. We'll focus a little bit more on data usage and what are some things that, as a recap, what are some things that you guys want to ask yourselves before moving in? And where's the future going with this? Like over time, we should see more hyper personalization in our usage and our premiums, like we see with hyper personalization in retail. But with the type of technology they're using, I think there's some other options and other applications that can be utilized for this. So we're going to talk a little bit about that. And then finally, we are going to conclude with, so where's it going? Specifically with UBI, what can we see with insurance premiums in the next 1 to 2 years, 3 years, and even 5 years down the road? All right. Well, thank you very much for your time today, and I look forward to seeing you again.